Codie Sanchez, Managing Director at Cresco Capital Partners, and Joe Brusuelas, Chief Economist at RSM, who's on with us often. Codie, let's get your take. And Joe, I can't wait to hear you're a little more bearish. Codie, give us your outlook. You're feeling still positive.
Absolutely. I mean, I think these numbers, 3.5 unemployment, we haven't seen this since the summer of '69, right? Back to Woodstock days. And I think in tandem to see it without the inflation that we thought we were going to see. And let's be honest, these August, September numbers, we always expect to see some revisions to the upside, just like we saw in August. So I actually think the economic data is pointing to all things better than we thought, especially with impeachment concerns.
But Joe, you're a little more cautious now. Why?
Well, the trade tensions have clearly spilled over into the real economy. We've seen a multi-month slowing in hiring. Wages clearly peaked last year. While I like the fact that we added under 36,000 jobs, stabilizes the unemployment rate, it did fall to a multi-year low. Those are all good things. But the cause of what's driving slower hiring has not been lifted. In fact, it's likely to intensify.
You know, it's interesting because we just had on a guest. We were talking about the market being range bound, and he said, look, there's no real catalysts for companies to have, grow their margins. But at the same time, we don't really have a lot of risk to the downside. So are you in a sort of steady eddy area, or you feel like the economy will just keep climbing this wall of worry,
Yeah, well, I mean, I don't think we are going to see a rising tide lifts all boats situation. I think you're going to have to be really intelligent about the sectors that you pick within the U.S. economy, but there are plenty of areas where we're seeing double-digit growth in the economy. I mean, for instance, we're seeing in the cannabis sector, to throw that out there, where interestingly, a lot of these industries don't even get into the economic data these days. In that industry, there's 10,000 jobs a month that wouldn't even be in the payrolls.
Right, that is very interesting. A lot of that would be in Canada, too. The stocks haven't done particularly well lately, because there's a lot of concern about regulation and whether that actually comes to fruition. But Joe, within the report, I know you had a lot of worries, but there's some bright spots in there. And give us some of those, and what is your investment play now going forward?
Okay, so what I've seen this year is education and health really carrying the load in terms of hiring. Professional business services. That tells you there are going to be areas of the economy like tech and life sciences that are going to plow right through whatever slowdown if it materializes next year. I think that's really where you really want to look. But what you're seeing today, Nicole, is a classic relief rally. Because let's be honest here. The economy slowed. Right now, if you're tracking growth, GDP, it's around 1.4 for the third quarter. That means from mid-year last year, 4.2% growth to 3 to 2 to well under the long-term capacity of the United States economy to grow. Under those conditions, equities are going to be challenged at one point, just not quite right now.
Okay. And one of the reasons you say a relief rally, I mean, at least in part, people are expecting the Fed to cut. We have China on the table. The dollar has been strong. What do you make of some of those elements, Codie?
Well, the part I think people are missing is, one, what sort of triggered it this week was the ISM manufacturing numbers, but that's actually a survey. That's not hard data. I mean, how do we have that number down this much? Is obviously impeachment, China concerns, but then we have personal consumption up 8.7%.
Well, I can tell you why we have it down, because manufacturing's down almost 1% on a year-ago basis, and consumption peaked in May.
Well, so my thought is, if you're continuing to grow at 8.7% consumption, that means we're going to have to produce some goods.
So here's what produced the 2% growth number. Consumption was up 4.6%, and government spending was up 4.8%. You brought up impeachment, the polarization in Washington. We're not going to see fiscal expansion the way we have over the past 2 years under these conditions. That means the major drivers are coming off. Right now, at this point, consumption is cruising along at around a sustainable path near 2.5%. That's not going to get you barely 2% or 3%. You're going to be stuck between 1 and 1.5% unless there's some other stimulus that's put forward, because let's face it, the trade war has completely offset whatever positive benefits are left from the 2017 tax cut.
Well, I think we also have to make sure we don't think that the government is the only driver of economic growth.
That's not what I'm saying, but we had a huge increase.
Let her finish her thought just for 1 second.
I do think that we have to be careful about thinking that the driver for growth is the Fed funds rate. I mean, is Apple really waiting to buy another company because we drop by another 25 basis points? I don't think so. So I think what we're looking for is we want to see a resilient consumer, which we already have and will continue to see. I'm not saying we're going to have massive GDP growth, but I think the economy is better than we think.
Right. So some of the job growth has been contributed to many of the government jobs. No
I think
doubt.
Apple
Census
just rolled.
jobs.
I think Apple just rolled over an enormous amount of debt as the federal funds rate went down, and that does create conditions for Apple to expand not only around the world but also here in the United States. We're at a very interesting point of the business cycle.
Okay, how about final thought? 6 to 12 months from now, Codie?
I think we're sitting pretty. I think you're actually going to probably not see a trade deal done in that time frame. I'm completely concentrated on that, but what I do think is going to happen is we've seen the same thing from Trump again and again. He puts really hard line on the table in order to get a deal done, so I think it could happen. I think the U.S. economy is growing at 2%, and I'm a buy in this market.
And Joe? 6 to 12 months?
No recession, 1 to 1.5% growth, no trade deal. Largely what you're going to see is the status quo. We haven't seen equity markets really increase since January 2018. I think we're just going to be treading water.
Excellent conversation, out of this world. I love it. That was a great conversation, and we'll have to circle back to really see what happens, but you're making wonderful points. I really appreciate both of you very much being here today. Thanks to our panel, Codie Sanchez, Managing Director at Cresco Capital Partners, and Joe Brusuelas, Chief Economist at RSM.